Good morning and welcome to the CABE Webinar Wednesday. Today we are looking at how to present your business to get the best insurance terms for your professional indemnity insurance with Tim Grant, Director at UKGlobal. UKGlobal specialises in professional risks and the placement of insurance arrangements for several associations and membership bodies, working with insurers to obtain favourable terms for those involved. This webinar will help you to understand the advantages of investing time into the presentation of your business to your insurance broker or insurance underwriter, and why it is important to review your insurance programme. My name is Laura and I'm the Associate Director of Marketing Communications here at CABE, and I will be acting as moderator for this morning's session. CABE strives to create interactive webinars, and if you're watching live, you can use the Q&A function to submit questions, which will be addressed at the end of the session. You're also welcome to contact us at webinars@cbuild.com. Let me now introduce today's presenter, Tim Grant. Tim oversees the professional risk team of UKGlobal. His career started in insurance in 2007, specialising in professional indemnity and management liability insurance, and joined UKGlobal 5 years ago. Prior to this, he worked for a Lloyd's broker and was at the time one of the largest independent specialist professional indemnity brokers in the UK. Over the last 14 years, Tim has developed his knowledge of the needs and requirements of those who require financial lines insurance, whilst building strong and long-standing relationships with insurers based on expertise and trust. So now I will hand it over to Tim and he can begin the presentation. Over to you, Tim.
Thanks, Laura. Thanks everybody for joining us this morning for the webinar. I'll try to keep it as light as I can. Understand insurance isn't always the most interesting or fascinating subject. But as we go through it, I do welcome questions, which we will discuss and go over at the end of this presentation. Please don't be afraid to ask any questions that pop to mind. Nothing is maybe too simple, too silly. Insurance is often sometimes made more complicated than it needs to be. And I think it's important that everybody understands what it is you're buying, why you need it, and how you can best help yourselves during the renewal process. My voice is going a bit, so I'll do my best to speak up. So I'm just going to start by sharing the presentation. Let's move on a second. Okay. Okay, the next slide. Sorry, apologies, 1 second. So, introduction. The objective of the webinar today is to increase the understanding for yourselves of what insurers are looking for when they are reviewing a professional indemnity submission and how you can help sell your business to them. We're going to look at what makes a good presentation to insurers and how, if you invest a bit of your time into the presentation, it can be advantageous in relation to the premiums you pay and the coverage you obtain. We'll also look at what you need to consider when you're reviewing the quotations you have back. That could be from one broker or a few different brokers. Devil, as always, is in the detail. Not all quotations are the same, and you need to consider what it is you want and why you're actually purchasing professional indemnity insurance. And then towards the end of the presentation, I would like to just go over directors and officers insurance, what it is, and why it may be important for you and your business, if you are a partnership or a limited company, in the kind of ever-changing and litigious regulatory landscape that we find ourselves in today. So firstly, what is professional indemnity insurance? So professional indemnity insurance provides cover in the event of a negligent act, error, or admission in the course of the professional business you have undertaken that then leads to a financial loss to a third party. What's key here is it can be an actual or an alleged wrongful act or claim against yourself, which opens up the real benefits of the professional indemnity insurance, which we'll come on to shortly. The purpose of the cover is to provide defence costs in the event of an allegation. This is often an element of the cover which many people overlook when considering purchasing professional indemnity or purchasing it. It's actually probably the biggest use of the professional indemnity insurance that we see is the defending of an allegation, and it's access to that real specialist advice, either from your broker, from the insurer, or from the insurer's panel of solicitors, which can often help to push back or stop an allegation made against you in its tracks, if there's nothing to it, or it can help to handle and mitigate how large a loss can be if you are found to have been negligent. Obviously, if you are found to be negligent, the professional indemnity will then look to indemnify any awards made against you to a third party. Professional indemnity is not actually a legal requirement. However, it is mandated by some regulatory bodies, the ARB, the RSCS, and the likes. And it is often led by contractual requests or obligations from those that you enter into projects with. We are seeing the requirement for professional indemnity is now becoming a more regular occurrence, maybe where before people haven't required professional indemnity insurance. And we think that will continue to grow as third parties look to cover their own liability they may have to parties they're working for or lenders. And we feel this is something that isn't going to go away anytime soon. So professional indemnity insurance. I understand that many of you probably already carry professional indemnity insurance with your businesses, or if you work as a sole trader. And maybe at times it can feel like a slightly boring process. Maybe your broker doesn't explain to you what it is the insurers require. Maybe they just send you over a proposal form to complete and say, send it back, we'll get you your terms. But I think it's important to look at what insurers are looking for and what they're considering their end when they're looking at the professional indemnity insurance for yourselves. And we'll go on to how that impacts the covers and the premiums you get. So the first thing that insurers look at is the company itself. Who are you? What do you do? What does your website say you do compared to maybe the work you do? And this is something that we often have conversations with insurers on, where the website may say that you undertake a whole host of activities that you've never undertaken, but they do like to dive into who you are and what you do. They'll look at the history of the business. How long have you been established? Are you a new startup? If you're a new startup, is there a potential risk there that you make about a business in the first few years, or do you have a history of a long-standing established business? They'll look at the income that you undertake, the income that you have. One of the main rating guides for professional indemnity is your turnover. Rightly or wrongly, insurers presume that the higher the turnover, the more risk. And that's either because you're undertaking more work on various projects, or maybe you're undertaking work of a slightly riskier nature, which you're being paid more for, which can then lead to possible complications. The second factor insurers look at is the type of work undertaken. Obviously, I understand there will be a whole host of different professions on this webinar, but the type of work you undertake will have an impact on the premium you pay. So we'll just use engineers for an example. If you're undertaking mechanical and electrical work, is deemed to be lower risk than maybe civil structural engineering. It's really key with the work you undertake to properly show insurers a true reflection of your work. You want them to understand what it is you do and ensure that you're indemnified if there isn't a claim which comes from work you have either undertaken in the past year, you're looking to undertake, or maybe work you've undertook a few years ago which isn't maybe highlighted in the current presentation, but you still require indemnity for. Who do you work with? Who do you work for? One key thing insurers often look at, and they will often ask for, is give us details of your contracts and who are your clients. Again, insurers are looking from their perspective at risk. If you're working for maybe a residential client, that is deemed to be lower risk than maybe working for a blue chip company, a large contractor, or a large commercial firm. The thought process here is the larger the client, the deeper the pockets, the more aggressive they can be when they chase you in the event of a claim. So do fully disclose who it is you're working for and who it is you're working with. Contracts. So what contracts are you working on? Who are you working with, and what is the size of the project that you're involved on? Now, this information isn't always readily available to yourself, but usually insurers will say, can we have details of the total contract value and then your element of the project? And these two pieces of information are key. The first, the larger the project, the possible larger loss. And this may not be from something you've done. It may be a third party involved on the project, which has a knock on and delays the work you've undertaken. Or it may be that there has been an error in your work and this leads to a consequential loss, on the project, or maybe a delay. The reason the insurers ask for your element of the project is to try and work out what is the exposure. So it may be that you're working on a £100 million project, but your element of this equates to maybe £50,000-60,000 worth of income. By disclosing this to insurers, it does allow us to show that the area of work you're involved in is minimal on the risk perspective in comparison to the overall size of the project. So please do provide this information. We do often see people leaving this information off. Either they miss it, they're not aware of it, but it is incredibly important to be able to establish with insurers your exposure, the exposure on the project, and how this links back to what they want to provide in premium and coverage. Subcontractors and contract management. So one thing that is really rearing its head at the moment is the appointment of third-party subcontractors in your job role, and that may be either where you are, a contract administrator or project manager, or maybe you've been contracted to undertake some work which isn't within your scope of expertise, and you've decided to appoint a third party to work on your behalf. Insurers are particularly keen to understand how you go about choosing the subcontractors or third parties that you appoint and the due diligence you do on this. We are seeing quite a high rise in insolvency for subcontractors where maybe, they've been hit by economical times, or there's been delays in the payment chains to themselves and they're not able to meet bills and they've had to close down the business. The issue we get here is if you are responsible for the appointment of a third party to undertake professional services on your behalf, if they either go out of business, don't have the insurance which necessarily meets the claim, contractually, you're still liable to the end client if they have asked you to appoint the subcontractor directly yourselves. So where you are working with subcontractors, it's key to show to insurers how you've gone about picking the subcontractor, due diligence you've done on them, have you obtained copies of their insurance certificates yearly in line with the liability periods under the project, and that this is continued to be done. So if there is a negligent claim against you for work a third party has undertaken on your behalf, there are the lines of subrogation back to them for the insurers. The same goes for contract management. Insurers, a key thing for them is to understand when you are asked to sign into a contract, how do you approach this? Do you just sign anything that's put in front of you? Do you obtain legal advice? Do you ask your broker to review the contract from an insurance perspective? Insurers are looking to see that you've taken consideration to the contractual terms that you sign into and that you're not creating a liability for yourselves, which is above and beyond what would have existed in absence of the contract. Not many people are aware, but there are exclusions within professional indemnity policies, usually, where if you have agreed to a liability which is greater than would have existed in lieu of the contract, you won't be covered. So it is really important that you look at how you approach these contracts you're asked to sign into. Are they the standard JCT documents? Is it a bespoke warranty or a deed? Do take time to think about this and think about how you approach it and the impact that could have on your professional indemnity insurance, your coverage, and potentially if you're leaving yourself uninsured if a claim were to arise under that agreement. Approach risk management is the next thing insurers look at. How are you looking to cap your own liability? What is your approach to risk management? Contract management is one of these. Do you have your own T's and C's that you provide? Do you look to limit your liability? Do you provide and ask for a clear scope of services within contracts that you sign into and agree? So key thing is to show the insurers that you're taking steps to minimize your liability, and in turn, you're minimizing their liability. The last key thing insurers look at is claims history. Have you had claims? Have they paid out? Have they incurred defense costs? How does this impact the premium? Claims aren't necessarily a bad thing. It's what the insurance is there for. The key is providing clear and precise information to the insurers, as if you had a loss or a claim and there have been costs incurred, what are they, and how has this impacted your PI premiums historically? So, what should your presentation include? Well, firstly, an overview of the company. Who are you and what do you do? So, where are you based? How long have you been established? Do you specialize in any specific area or have a specific niche? Are there any projects you've worked on historically that you're proud of that have completed, which show, the high level of work you've undertaken? Don't be afraid to be a bit bullish and tell insurers how good you are. They're not aware of who you are or what you do or the difference between yourself and the next risk that comes across their desk. So this is the time to show them why you are a good firm, a high valued firm, and why they would want to take you on as a client. Experience of directors and key staff. Don't be afraid to sell yourself to the insurers. Again, insurers are looking at risk exposure from their end. They want to know that the people undertaking the work or overseeing the work have the experience and relevant qualifications to do so. So you're a member of CABE, are you MCABE, are you an associate? What is your experience? Let us know your qualifications, let us know your history. That could be something simple as a LinkedIn profile, and let us know how many years you've been undertaking the work in the role that you're in at the moment. If you have any key staff who are supporting you, who are they? What do they do? What's their experience? What's their qualification? We're trying to build a picture here to insurers around the day-to-day running of the business and how you have the relevant experience on contracts that you're undertaking. So are you experienced to be working on the size of project that you're undertaking? Are you relevantly qualified? And how long have you been doing this? The next is to fully disclose to insurers the type of work that you undertake. So these forms that you may be asked to complete are fairly common. They'll ask you to break down your activities into several sectors, but they may not necessarily specifically note the work you're doing. So don't be afraid to add extra detail to this, and that could be by the way of a presentation, in an email, via a Word document, to really go into detail on what type of work you undertake. So if you are undertaking quantity surveying work, or you're undertaking engineering work, or maybe you're undertaking project management work, what does that entail? What are your responsibilities? Are you taking on the role as principal designer under the Building Safety Act on projects that you're working on? And if you are, how are you approaching this? How are you limiting your liability? Or you may be working as, a designer on the project and there is a principal designer above you. Don't be afraid to give detail to insurers. The more detail they have, the better. We have to be aware, obviously, not to data dump. We don't want to give them reams and reams of information, but we need to be able to advise them on the work you do and how you undertake that. Your presentation should include the scope of services that you provide on the project and the profile of work you're undertaking. So what's your responsibility on the projects? Often clients will tell us, this is the project we're working on, this is the size of the project, this is the income, but not actually give us details on what it is they're doing. Again, don't be afraid to give us a bit more information. Are you working as part of a team? Are you the sole sign-off for design or supervision? Really let us know what you're doing. And again, if you are part of a team, or there are other referral points, or there are other sign-off points during the process, then let us know. If there are other points of referral or sign-off on these projects, it removes you from liability somewhat, because there are others who are signing off your work. If we don't explain this to insurers, they won't know it, and if they don't know it, they can't factor this into your premium accordingly. Risk management and attitude to risk. Now, we've touched on this briefly before, but how do you look to reduce your exposure? Do you look to only work on specific types of projects or projects of certain size, or maybe there's certain clientele you work for? Will you only work in certain parts of the country? Are there any certain contractual terms that you'll sign into? Really let us know what you do to reduce that risk. This is an area that I feel people really do often overlook because it's not necessarily asked for on the proposal forms or the documentation that you're asked to complete for the professional indemnity insurance. And people, rightly so, think everything we need is within the forms. The forms provided are a guide to capture information, but it's not ultimately everything that you can give to insurers. Claims history. If you have had a claim, as we said before, what happened? How did it happen? Were you responsible? What were the costs involved? Often there will be notifications made under the insurance which go nowhere, and this is fine. Don't be afraid to say we had a few notifications in the last few years. These were precautionary. We were wary of meeting the terms and conditions within our policy wording. There's often a misconception that if you notify something under your insurance policy, your premium will rocket the next year. This really isn't the case. Unless you've incurred significant defence costs or significant awards to other parties, or you've had a significant number of notifications in a year, which could potentially show a trend to a systemic issue or maybe an issue in the work you're doing, you won't be penalised for this. Often insurers can look at risks within certain sectors where there's never been a notification or claim, and this can actually flag for them. There are certain sectors which lead to more claims, and this could be environmental issues. This could be because of ongoing issues, regulatory wise. It could be, if we look at post Grenfell, there were a lot of notifications in relation to cladding, fire safety, and combustibility. Don't be afraid to really give us the detail. Insurance objectives. What coverage are you looking for? So when we're presenting this to insurers, we need to say to them, what coverage do you have at the moment? What coverage do you want? And why do you want it? And when we look at the coverage that you want and may require, we can break this down into several factors. Firstly, how liable and exposed do you feel? You may carry a limited indemnity of £1 million, but you're working on a project for 100 million. Although your exposure to this project may be minimal, do you think £1 million is suitable to pay any award or defend any claim if you're dragged into what we call a scattergun type approach, a claim where everyone on the project is notified and you can incur significant legal costs? The next thing to consider is regulatory advice. Is there a minimum limit of indemnity that your regulatory body asks you to carry? If there is, have you considered this, and is this sufficient for the work that you're doing now, the work you've undertaken, and maybe the work you're looking to move into in the coming years? And finally, contractually is the next point. Often when you sign up for a contractual obligation, there will be a minimum limit of indemnity that you're required to carry. And within this, there may be other sub-limits that you requested, so pollution, asbestos, or maybe even fire safety coverage. Does the limit you have now meet those contractual requirements currently and historically? It's key to remember that historically, you may have agreed to carry a set limit or coverage for 6 years or 12 years, depending on if you signed into warranty or a deed. Failure to carry this could actually lead to contractual breach, and it may be that there is notification from work undertaken where you're required to carry a higher limit. You've dropped your limit, and not only do you have a contractual breach, you potentially have an uninsured element because the limit you have now isn't sufficient. If you are looking to lower your limit, do discuss it with your broker. Do be honest with them and say, look, historically, we've had this limit. We're looking to lower it now because we feel maybe we can't afford it. It's not commercially viable. We feel we're out of limitation periods. Just talk it through with your broker and get their advice. I think sometimes people feel we just try to sell the highest limit, and that's not necessarily the case. We're just trying to look at the exposures you have, either organically or contractually, and ensure that you maybe haven't forgotten, what you agreed to some time ago. So the next thing I want to discuss is what to look out for when you consider your professional indemnity quotations. As we have touched on, not everything is the same. And I think the first point you need to consider is who is the insurer and who is the broker? And do they have a track record of writing professional indemnity insurance? So have they done this historically for, a number of years or decades? And do they have a good track record of paying claims? Or are they maybe a new entrant to the market and they've only been doing this for 12 months or less? What we often find with new markets is if they don't have a track record, we have no understanding of what their ability to react in a claim circumstances. Are they going to pay claims? And are they going to be here to build a relationship with you in the next 12, 24, 36 months? Or are you going to be looking to move insurer again? There are times when new entrants are very beneficial, when the market hardens, when terms are maybe not as easily accessible, or maybe where, the underwriters have a rich history within the market and a respectable track record and a good financial rating. Currently, we're in what we call a soft market. The professional indemnity market tends to go up and down, and this can be soft markets where premiums reduce and coverage is more readily available, back up to a hard market where maybe premiums increase, capacity reduces because claims have increased, insurers aren't making the money they need, and cover gets more restricted. Looking at the broker you work with, do they specialize in professional indemnity insurance? I'm sure many of you on this webinar specialize within certain sectors of your profession. I think the same thing could be applicable for your insurance. Every commercial insurance broker, every commercial insurance broker will be able to offer you professional indemnity, but do they have the right access to the markets you need? Do they have the understanding of your risk? Are they able to obtain maybe additional coverage? Are they able to answer the queries you have in a year, offer contractual help? And are they able, most importantly for me, to handle a claim effectively and sufficiently if you have a claim or a notification? Some of you may have had a notification or a claim. Some of you may have found it as a very stressful and hard process. And what you ideally want is a broker who's versed in handling professional indemnity claims. They either do it themselves or they have an in-house claims team to assist them. And can they walk you through the process and hold your hand and make it as easy for you as you can? Professional indemnity, I'm often told, is money for old rope, but the proof is really in the pudding for when you need it. You pay for your insurance and you want it to react in a certain way, and you need your broker to work with you in a certain way as well. Another thing to maybe think about with the broker, if they specialize in professional indemnity, what additional services can they provide you? Can they provide you with webinars for CPD? Can they provide you with literature on the state of the market? Can they provide you with a contract checking service? There's various different things that a specialist can provide you with that maybe a more commercial broker may not be able to. So it is worth weighing it up. Do you have a relationship with another broker who may do your insurances and you trust them? Or maybe are you looking for a more specialist in an area that can sometimes be fairly complicated? Professional indemnity can be written on several different bases, a civil or legal liability basis, or an errors and omissions basis. Now, there is a difference on the two types. Errors and omissions covers you for claims from negligent errors and omissions in the course of your professional business, where a civil or legal liability policy extends beyond this to cover other exposures that you have legally. This could be breach of contract, defamation, and other points like this. Although in an errors and omissions basis will provide you with cover for allegations of a wrongful act, there are at times gaps in this type of policy which you may not be aware of, your broker may not have disclosed to you, that a civil or legal liability policy would have covered you. There's little to no difference in the premiums for the wordings. Often it can be based on the insurer you're using, the profession you are, but it's worth looking at this and asking the question to your broker. Ultimately, you want to be covered for as much as you can on as wide a basis as you are possibly able to obtain. Basis of the quotation. So let's say you buy a £5 million limit of indemnity. Is this on any one claim basis or an aggregate basis? Now, an aggregate basis means the limit you have in this example 5 million, is the total amount of money you have for the year, irrespective of how many claims you have. And if you have a claim, that will erode into your policy. So if you have a limit of 5 million and you have a claim for 500,000, you're then left with 4.5 million for the year. The problem this can sometimes provide is if you've agreed contractually to carry a £5 million limit and you now have a £4.5 million limit, although through no real fault of your own, you are now at breach of contract. So if it is available, we'd always push an any one claim limit. For some professions, this isn't actually necessarily available. So if you're involved in maybe a lot of cladding or heavy fire safety risks, or maybe some, extremely large projects. But there are ways to work around this that your broker can help you with. You can look at reinstatements of the limit, and there are various ways to work around this. Any one claim is kind of what it says on the tin there. You have £5 million for any one claim, irrespective of how many claims you have. So if you had 5 claims in the year, you'd have 5 lots of £5 million. Another consideration is, are defence costs provided in addition to your limit? So do you get your pool of money and defence costs above this, or are they included within the limit? If they're included within the limit, you may want to be mindful of the size of limit you buy, because the £1 million would then be there to pay any awards and defence costs. Depending on who the claimant is, the type of claim, how litigious it is, and how long it plays out for, defence costs can get fairly hefty. So this is definitely something that you need to consider when looking at the PI basis. When you're looking at the policy excess, firstly, is it applicable to costs or not applicable to costs? This is something people often overlook. So where it says not applicable to costs, you do not pay any excess on any defence costs incurred by insurers or maybe their panel solicitors, and you only pay an excess if an award is made against you. This is clearly beneficial because if you have a number of notifications which incur defence costs to defend it, you're not footing any costs. If the excess is applicable to costs, then you will be liable to pay the excess in relation to the defence costs. So let's say that the insurers incur £30,000 worth of defence costs. You have an excess of £5,000 that's applicable to costs. You must pay the first £5,000 of that £30,000. If you did have a number of issues in the year, maybe there was a systemic issue, maybe there's a new worry within the industry, or the world, which has led to a large number of notifications, you will be liable for the excess on each of those notifications. This could then cause maybe a capital adequacy issue or a funds issue. Do you have the money within the company on the balance sheet? Are you able to afford that? So again, we would consider that, looking at what you do, who you're working with, and maybe a history of how many notifications you've had. Is the quotation offering fully retrospective coverage? So one of the reasons professional indemnity is more expensive than other policies is that it provides retrospective coverage. So it's covering the work that you are doing now, the work that you're going to do moving forward, and importantly, the work that you've already completed. Not all policies offer fully retrospective coverage, which we would expect to be back to inception date of the company. Where you have a fully retrospective cover, it will often say none, which can be confusing, but none is the widest form of retrospective coverage you can have. Insurers will at times look to add a retroactive date. So where we have a retroactive date, it means any work undertaken prior to this date wouldn't be covered. This maybe it's because the first time you've bought the professional indemnity insurance, maybe you're upping the limit, maybe they want to put it on in relation to a certain project. But we'd always say, do try to push for as much retrospective coverage as you can, even if it is your first PI policy, because there may be liability in work that you've undertaken before which didn't require professional indemnity insurance but could still lead to a claim. One of the really important things is to look at what's actually excluded within a policy. So it's great for brokers to say this is what you're covered for, but are they highlighting what you're not covered for? This could be via exclusions, which are noted on the policy. So it may be that they're excluding claims in relation to pollution, asbestos, fire safety, or the like. But importantly, what else is excluded within your policy wording? We have seen insurers adding exclusions to their policy wordings, such as a fire safety or combustibility exclusion, that maybe aren't potentially explained to you, as the broker maybe hasn't looked at the policy wording or they haven't picked up on it, and you're not fully aware of your exposures. So do take the time to look for it yourself, and do take the time to ask your broker, are there any specific exclusions that I should be wary or cautious of? The next thing we need to consider is the limit offered sufficient for your exposure? And this links back to what we said before. So does it meet the contractual obligations that you've signed into and agreed to? That could be under warranty deed or collateral warranty. Is it sufficient for the exposure you feel that you have? Is it sufficient for work that you're going to undertake in the next 12 months? We would always say get a range of different limits. Often a bulk of the cost sits in the first £1 million, £2 million, maybe even the first £500,000, depending on what you do. As claims don't often exceed that amount. Obviously, the size of the project you work on may impact the costs of higher limits. If you're working on a total contract value of, say, half a billion, if you're looking for larger limits, that may have a slight knock-on effect because the potential loss would be higher. And lastly on this slide is, does the policy provide pollution, asbestos, or fire safety coverage? Often contractually, you may be asked for 1, 2, or all 3 of these. And not all policy wordings do cover these. So it is important to look at the cover you have at the moment, the cover you need contractually, and the cover offered. We'd always push to say, even if you don't have a specific obligation for these, it's worth asking. Fire safety coverage hasn't been readily available probably for the last few years, but it is now coming back quite regularly from insurers. They are offering it mainly from inception of taking the fire safety coverage moving forwards. Some insurers will look to backdate the cover to 2019. So you'll have the cover from 2019 onwards. And usually insurers run with the suggested Lloyd's of London wording, which is rectification and reperformance costs. So no consequential loss or associated financial loss. Some insurers will provide a wider element of fire safety coverage without these caveats, but that will usually come at an additional cost. So again, think about your exposures historically, now, moving forward, and think, do I need these covers? Do I have an exposure? And I would say that the fire safety one is probably one to consider, as it hasn't been readily available, but is now something which is, available. Sorry, bear with me a second. Okay, apologies. We're just going across the next slide. Okay, common pitfalls to avoid. This is something that maybe people don't consider. Maybe they see professional indemnity as a bit of a laborious exercise, or maybe they feel they don't need the cover. But there are some mistakes you can make when going through the professional indemnity renewal, which may not seem detrimental, but can be. I think the first one is rushing the process and leaving it to the last minute. Ideally, you want to provide your broker with as much time as they can to negotiate either with the holding insurer or other insurers if they're doing you a market review. The more time they have, the better. It allows time for yourself and the broker to fully investigate and provide to insurers who you are and what you do. It allows time to obtain various quotations, which can be used as leverage, between insurers, and it gives you time to maybe consider the different offers you've got. When it's left to the last minute, you can often be rushed into taking the quotation available at the time because you don't want to go without cover, and it maybe doesn't allow you to obtain the best premium and the best coverage that you can get. We would say ideally that you get your proposal form back to your broker 4 to 6 weeks before renewal, but even if you get it back a couple of weeks before, that should provide sufficient time for you to allow your broker to do what they need to do. Do explain the roles and responsibilities on a project. Failure to do so can lead to many assumptions from the insurers. Obviously, assumptions can lead to misunderstanding, which in turn can lead to higher ratings and higher premiums. So do take time to explain that. Don't approach too many brokers. This is something which people often overlook and maybe think, well, why not? The more people we go to for our car insurance or house insurance, the cheaper premium we get. There is a limited number of markets who do professional indemnity for specific professions. And if they see the risk from a number of brokers, they often will decline. The reason for this is a lot of insurers would like to build a relationship with a client. Often the presentations can be presented in different ways with differing information. And then the insurers feel that maybe you're not giving all of the time to work with a few brokers, maybe 2 or 3, and you're just going to as many brokers to get the cheapest premium as you can. Please do not omit or downplay claims. You do have a duty to provide all relevant information to the insurers on a correct and honest basis, and a duty of fair presentation. Failure to provide full information on claims, so that could be any costs incurred or amounts paid, or failure to even admit that you've had a claim, could lead to declension of the PI, or failure for insurers to pay another claim due to non-presentation. So do it, please. Not fully completing proposal form and questionnaires. First impressions do count. I think maybe we're all in a rush and people want to do this. I do know a number of insurers who, if they look at a proposal form and it's got various squiggles and crossings out and questions not completed, will just not look at the risk or say go back and get it completed. This can delay the process. It can lead to some insurers just declining the risk because they feel, if you can't take the time on your PI, what time are you taking on your day-to-day work? First impressions really do count here. So do take the time to do your forms, do take the time to do your questionnaires. If there's a question you're not sure about, or maybe you're not sure how to answer it, call your broker, ask them. Hopefully your broker is reviewing the forms and the questionnaires before they send them to insurers. So, maybe if there are various points that they feel need tweaking, amending, or maybe just being answered, they will advise you of that. I think the last one is considering your insurance requirements in line with contractual obligations. Again, I know I've mentioned this various times, but people often say we're going to lower our limits and then come back mid-year and say, actually, we've just been reminded we need to carry a higher limit. Try and get it covered off at the same time. So the next point that I want to touch base on is when it comes up, what is directors and officers insurance? So we're going to go away from the professional indemnity now, and I'll happily take any questions on this, at the end. But directors and officers insurance is something that I wanted to highlight to those of you who maybe are in a partnership or, part of a limited company, and how it protects you as a director. It's an insurance that is often overlooked and maybe misunderstood, but for me, it is personally one of the most important policies you can buy. So directors and officers insurance protects you as an individual for decisions you make as a director, officer, or partner within a firm. And this can be decisions you make on a day-to-day basis on behalf of the business. If one of these decisions is alleged to be a wrongful act or can lead to a financial loss to a third party, to another shareholder, it can lead to an allegation of negligence against you. Your own personal liability in an event of a claim like this is technically unlimited. So if the company either chooses not to indemnify you or doesn't have the funds to do so, you may have to fund any defence of an allegation or award from your personal assets. So for me, this really is an essential policy. It covers claims which may come from third parties, other shareholders, directors, regulatory bodies, ICO, HSE, and the policy can also be extended to add in what we call entity cover, which covers the company itself, and also if you're lucky enough to have a team with you who work with you or for you, employment practice liability, which will cover employment related claims, so workplace bullying, ageism, sexism, that sort of stuff. For me, one of the big pluses for directors and officers insurance is the coverage it provides you for the personal exposure that you have under the Building Safety Act. So with the introduction of the Building Safety Act 2022, there was an element of personal liability created for directors and officers, as you have a duty to include compliance and duty holder regimes, and this all goes back to the golden thread. There is potential for the regulator to come to you to provide a investigation, to fine you, to allege potential negligence. And what the DNO can do is it can provide the costs to defend you if there is an allegation from the regulatory body under the duties you hold for the Building Safety Act. And I'm quickly just going to move on to one quick claim scenario on this before then we welcome questions. And apologies, it's moving fairly slowly again. Okay, so we have recently seen a D&O claim under the Building Safety Act. The client worked on a 12-storey residential project back in 2023. They were responsible for specifications of fire, stopping and cavity barriers, which were found to be non-compliant. And the Building Safety Regulator launched an investigation into that personally and into the company. The allegation was the director failed to ensure proper quality assurance on the work which was subcontracted out. There was non-compliance with the golden thread documentation, which is obviously applicable to high-risk buildings, but obviously, pretty much everything now. And they also ignored the documented resident safety concerns. The outcome for this, as I said, was a personal investigation into the director, and £85,000 worth of legal defence costs were incurred in defending the claim and for regulatory costs as well. So what I'm going to do now is that's the end of that section. I'm going to stop sharing the screen and hopefully welcome any questions that anybody may have.
Thank you, Tim. That was great. Do we have any questions that anybody would like to raise? No questions at the moment I can see.
That's
so
fine.
you've obviously covered a lot of
That's fine.
what people wanted to ask.
Yeah, if there are any questions anyone has, retrospectively or anything along those lines, then feel free to obviously pass them on to Laura, or you can pass them on to me. Can provide the contact details, and we're happy to have a conversation with you around, your own insurances, any worries, any questions. We also do a lot of cyber insurance, which is also an evolving section. So again, we can help with that as well. Thanks, because I tried to be as comprehensive as we can. Look, I don't.
Oh, one question's just come in. We've just got a question from
What is
Stephen.
considered to be a claim? That's a very good question, Stephen. Various different PI policies can set the precedent for what a claim is. But generally, we say any allegation of negligence, error, or a mistake that's made against you, either verbally or in writing, we would consider to be a claim or a notification. What we often see is people maybe kind of try and sort it themselves, and they run with it to the point where it escalates, and then they advise it to the insurers. And at that point, it's too late for insurers to be involved, and you can potentially then null and void the insurance because you've prejudiced not only your position but the insurer's position. So when there is an allegation of discontent or negligence, just pick up the phone to your broker, send them an email and say, look, this is what we've had. Do we need to notify this? And your broker should be able to advise you. Laura, you happy if I just work through these questions as we go?
Yes, of course.
That's fine. So next one we've got is, how do you work out the limit of cover you need? Any tips? Really good question. If it's not a contractual obligation, then I think you maybe need to consider with your broker again, and the broker's here to help you. Really use them as a source of help here. They shouldn't just be here to take your forms, send them off and get them a quote. You maybe need to sit down and say, okay, looking at the work I do and the projects I'm involved on, what do you think my exposure could be? Do you have any businesses of a similar size? What limits are they carrying? Can you talk me through what costs could be incurred in the event of a claim? So maybe just speak to your broker. Personally, myself, I would never duck below £500,000 or £1 million, only because the price difference between the two is very minimal. It all again depends on exposure, but I'm cautious. I'm a broker, you'd hope so. We're insured to the eyeballs. I think for the cost difference between, say, 250 and 500,000 and £1 million, I'd always go with £500,000 or £1 million as the bare minimum. But it may be that you have other considerations. And of course, we can provide the presentation in a PDF form. I can provide that to Laura with my contact details on. I skip that slide, which you can keep, and you can go through or contact me if needed.
The webinar will be placed on YouTube as well, so you will be able to view it afterwards.
Great, I'll be famous. No worries at all. Like I said, if anyone has any other questions, please do feel free to reach out to Laura or myself. My email address is tim.grant@ukglobalgroup.co.uk. Happy to have a conversation with any of you if that's at renewal mid-year, or you may be looking to start your business and you kind of have to navigate that insurance aspect of it as well.
Okay, so if there is no more questions, I'd like to thank Tim for presenting today and to everyone who has joined us this morning.
No
As a
worries.
reminder, the session has been recorded and will be both uploaded to the K website and YouTube channel soon. With that, we'll wrap things up for today. Thanks again to Tim and to everyone taking part, and we'll hopefully see you at the next K webinar. Goodbye.
Bye.